everyone, and welcome back to Globe Officials Inside the Markets. I'm your host Sunlight, and today I'm joined by Benjamin Brannan, Head of BD at CryptoQuant. So, watch on to find out about what CryptoQuant does, some market insights from Ben, and some spicy takes. So, enjoy! So, welcome to the show, Ben. Would you like to tell us a bit about yourself and how you entered the crypto sphere?
Yeah, definitely. Well, first of all, thanks for having me. So I kind of started my career in traditional finance. So I kind of divide my career really into three different parts. So the first part of my career was in equities in traditional finance. So I spent, the better part of 7 or 8 years working in Wall Street at a few different firms, Alliance Bernstein doing equity portfolio management, and then later at MSCI where I was more, selling and consulting to some of those kind of same firms like Alliance Bernstein and helping them set up, quantitative equity portfolios. And then after that, in around 2018, I did a little bit of a detour, and I went down the commodity route. And I set up a commodity trading firm that was based down in Latin America. And I partnered with kind of an established trading firm that was based in London and helped them kind of open up new pathways to Latin America to trade different types of commodities, mainly non-ferrous metals and chemicals, but physical commodities. And then around 2021, I had kind of already been looking into crypto. And so mainly looking into stable coins to help kind of lubricate some of the cross-border trade payments that we were dealing with commodities. And so this was around COVID. So I don't know if you remember, but they shut down all of the ports worldwide. So I kind of like immediately thought, okay, this is going to be probably quite bad. So I sold the business back to my partner and then kind of dove headfirst into crypto around 2021. And that was when I started working for CryptoQuant. And that kind of brings me here today.
Yeah, awesome. Actually, so before we dive into CryptoQuant,
Yeah.
I want to ask about what were the problems that you found with cross-border payments?
Yeah, good question. So the biggest one was that the banks have a complete stranglehold on a lot of these like mid-tier commodity traders. So, a lot of these trades can be like a single trade could be north of like $1 million or $2 million. And these are like relatively small trades. And to execute those trades, our firm had to get these lines of credit from the bank. And with that came a lot of like terms and conditions. One of them actually was specifically you can't hold any crypto on your balance sheet. So just
Wow.
straight up did not want any exposure to crypto. So that kind of, that specifically didn't make it difficult, but just generally the banks having that kind of control over, what transactions we could do and what transactions we couldn't do along with the time it takes to transfer the money, um, transferring to different banks and things like that. So we looked into stable coins and determining whether stable coins could be an alternative. By the time we kind of dug into it and realized that it could be an alternative, but that we would really just need the funding there to begin with, to kind of have like a treasury of stable coins. That was kind of when everything kicked off in terms of COVID. So yeah, those are really like some of the challenges that existed.
Everything can just be solved by stable coins, it seems.
Yeah.
Right.
Yes. I mean, I think so. That was actually one area I was looking into kind of when I first set out to go into crypto. I eventually decided to go back kind of to the same area I'd been working at before in traditional finance, which was more data analytics, portfolio analysis, and things like that. So I kind of went down that route instead.
Okay, so that segues perfectly into my next question. What with like data analytics and everything. So could you tell us a bit about CryptoQuant, what you guys do, and like What are your values there?
Yeah, definitely. So I guess, our kind of tagline, right, is lowering the hurdles of data-driven investing, especially in the crypto markets. So predominantly for Bitcoin, or Ethereum, or other ecosystems, and even nowadays like equity-related crypto as well. So I guess to put it bluntly, we like to call out scam projects. We like to call out bad actors in the space and kind of focus on the signal as much as possible. So our CEO and the company itself is based in South Korea. So our CEO, he kind of blew the whistle on Luna, for example. We helped some of our clients navigate FTX and help them withdraw their funds before the withdrawal halt. Um, and our team, like our research team, follows the data quite a lot, especially when, they make any kinds of predictions, especially as it relates to price. So we're trying to remove the emotion as much as possible and kind of stand firm on our predictions just because it's based purely on the underlying data. So we focus on things like realized prices and Bitcoin to understand whether the market's overvalued or undervalued. And we're still kind of a small team. So we're about, between 20 or 20, 25 or 30 people. But we're building some pretty cool products actually these days, and some pretty innovative ones. One of them, for example, is a counterparty risk product. And, even though we're in crypto, there's still a lot of counterparty risk, even though there shouldn't be, right?
Mm.
So we do a lot of proof of reserves, like monitoring exchanges and the amount of reserves they have, and using that a lot more for risk than kind of finding alpha. But that's a pretty popular product with some of the market making clients and hedge funds. And then another one that we're focusing on these days is tracking the revenue from miners. So we focus a lot on like entities within the space. So entities could be anything from an exchange or like an ETF or a fund or a bank. Although the banks, I think, are kind of gone, like the BlockFis and some of those names, right? But now, mining pools as well. And so now what we've done is we're kind of tracking from the mining pool to the miners themselves to determine, how much subsidies they're getting, right? So how much Bitcoin and how many fees they're getting intra-month. So we kind of like track and label and cluster some of those different wallets associated with the miners. And then essentially what we're able to do is we're able to help equity investors understand the revenue that these companies earn, not only like on an intra-month basis, but really like block by block, how much revenue are they getting? So instead of having to wait every month to determine whether, your stock has hit their monthly earnings or something, you'll be able to track that in real time. So I think it's, one of the first step towards really all companies, right, being able to track their revenue in real time.
Yeah, so it sounds like to me you guys are doing something very similar to like the fundamental analysis of like TradFi, right? So could you tell us if there's any like transferable skills between TradFi and, crypto?
Yeah, definitely. That's a good question. So I would say, I mean, first of all, how I got into crypto was really, really quite similar to what I was doing in the equity market. So similar to what I was doing, helping clients to essentially construct better portfolios using data, kind of doing the same exact thing in crypto. So, off the bat, that's a pretty transferable skill. But, I joined crypto because of the issues. Like one of the reasons was because I kind of saw a lot of the issues that existed in traditional finance. And a couple of those issues were things related to, like over financialization, or centralization of, of products, of processes. And so you can kind of think of, financialization, right, as, the wrapping or the bundling or deriving of the underlying assets. And one example that I use kind of often, but I don't really like to use it because I really enjoyed my time working at MSCI, but it's kind of a good example. One of the things, right before I left was this big question of China A share inclusion into their indexes, and whether like they were going to move the Chinese A shares from the developed market index into the emerging market index into the developed market index. And there was a lot of questions like, they have to meet certain, requirements within the methodology. Like these issues came out with this, U.S. investors essentially investing in some companies that, perhaps weren't the best companies for U.S. investors to invest in. Um, and some of those concerns, right, kind of came out eventually. So understanding, what worked and what didn't work in TradFi really kind of helped me determine what types of products would be useful in DeFi to kind of solve some of those issues. Um, so that's kind of a big one. I would also say that not just finance, but also like macroeconomics as well is a big one. So, things like game theory, which is a really good skill to have, kind of like gaming out different scenarios and super relevant to DeFi, whether it's, prepping for an ICO or launching new protocols and building the tokenomics. You can spend a whole lot of time and build out a really great project, but if there's vulnerability in the tokenomics, like or in the smart contract, those are definitely going to get exploited. So and then also, Bitcoin kind of not being able to handle some of these more complex financial transactions. Um, and then scarcity. Scarcity is a big one. Potentially that kind of was a little bit more related to my experience in commodities. But for example, just to give like a pretty straightforward example, you have gold and silver, right? They're more scarce than other metals, let's say aluminum or copper. But and so they're more scarce, so their price is higher, right? Not necessarily like a one-to-one correlation between scarcity and price, but like the correlation is pretty overwhelming, even though potentially, let's say, copper and aluminum have more use cases, right? So things like, stock to flow, which explains why, Bitcoin and gold or real estate are more valuable, some of the assets that are more valuable because they're more scarce than, for example, these I don't know, like industrial metals, where there's a lot of them, right? And they can be recycled, or stocks where you can just, dilute or issue new shares. So I guess experience both in commodities and um, equities and TradFi kind of help with DeFi.
Yeah, that's really interesting, actually. So, right, so you're likening, let's say, okay, Bitcoin to gold, right? So let's say these altcoins are copper or aluminium, like you said. So something that's less scarce. What are your thoughts on altcoins that, have unlimited supply?
I mean, I wouldn't invest in them if it was me.
Fair
Um,
enough.
I wouldn't invest in them. I mean, yeah, like the uncertainty, right? There's an element of uncertainty, and there's just kind of like it's kind of like having a boat and having a hole in it, right? Like you're going to be continuously fighting against, this uphill battle of, more water getting in your boat. So like issuing new, yeah, kind of like issuing new shares, right? You're going to be diluted. So this kind of comes down to you know, the game theory, but it also comes down to the decentralization. So if the game theory, if it wasn't gamed out in the beginning, creating this protocol, and I think it's pretty simple to have a cap, right, on that. So that's not much game theory to be had. But if there is no cap, then you have to think, okay, how are new shares issued, or how are new tokens issued, and how are they distributed, and who decides how they're distributed, uh, and that needs to be, at least clear, and uh, the protocol for that needs to be something that you're okay with, you know, depending on who you are. I mean, you could just be someone who's trading it. You could be someone who is, an initial investor. So you may have different priorities in that sense. So generally speaking, I mean, the better asset is going to be the one that has, the firm or the hard cap. It's going to be the one that, if it doesn't, at least has a protocol where, it's gamed out and things like that. So there are a lot, right? There are a lot of tokens and projects that don't have the caps, which I think is such an easy thing to kind of get around. But I suppose, for various reasons, they want to keep that cap soft.
Awesome. Yeah, okay. So you've kind of touched upon what you wouldn't trade. Um, would you like to tell us a bit about, your favorite trading strategies?
Yeah, so in terms of crypto, right? Generally, I mean, Bitcoin is something that I focus on quite a lot. Just the sound nature of the protocol, some of like the very core aspects of it, like the decentralization, the hard cap, the issuance, the security. Those are things for me, are what I look for in an asset, to hold value. But I would say there are downsides to that as well, right? So, it isn't as easy to scale it, either, scale it up or scale it vertically. So, it has its limitations. And right now we can kind of see that with Bitcoin. So we can see that, fees are, I think, higher than Ethereum right now. So yeah, it's, whether it's ordinals or whether it's,
Yeah,
anything
I was going
else.
to say like because there's so many people building out BRC20s now, which we can also get into, but yeah, maybe that's one of the reasons why.
Yeah, exactly. So Bitcoin does have its pitfalls as well. Um, so as a store of value, though, just as a pure store of value, I think that's, the best asset. If you are looking to do more complex financial transactions, then you need to look elsewhere, and you need to weigh the benefits of being able to perform that transaction, and then the risks of performing that transaction on this protocol that doesn't have, such a secure, you know, or isn't as decentralized, or doesn't have that hard cap, or doesn't have some of these other things that you look for, but it allows you to, you know, engage in a more, I guess, like financialized, right, transaction, or hold a more financialized product on the blockchain. So definitely things like, within DeFi that initially got me excited were things like decentralized exchanges or lending protocols and things like that. These protocols to where you could do more complex transactions, and then you kind of take on a little bit of the risk of, the other areas that they have to, kind of give up in order to make that possible, in order to scale it, right? So there's a lot more security vulnerabilities with the smart contracts we see, which kind of comes with the territory, right? Even when you're dealing with gold, for example, like, there's much less risk, holding gold than there is in taking on a huge loan, whether you have big interest payments. Potentially, those interest payments, are not fixed, right? And so you have to worry about, other things that might come into the protocol that you haven't accounted for. So that could be, rising interest rates, or that could be, a number of other things. So I think it really depends on, what you're trying to accomplish. And for me right now, I guess, just, at my point in life, I'm just trying to store as much of my energy and wealth as possible into something that retains its value. And for the time being, today I'm happy to kind of go into the traditional financial system still, and, take on some of those products. But, you know, the banking system isn't looking great these days. So who knows how
Mhm.
long, and when that transition might come where most people will prefer DeFi. Like I have some friends who have actually, used a lot of DeFi protocols, like in real world situations. Like I have a buddy, um, who's working at a market maker right now, and he had a wedding, and he had a bunch of Ethereum, and he didn't want to sell his Ethereum, but he also had to pay for his wedding. So I think he got a loan out on Aave,
Oh
So yeah,
wow.
he put like a decent amount of Ethereum, maybe like 20 Ethereum or something like that. Got I think it was over collateralized loan, and could pay for his wedding. And then doesn't actually have to pay off, doesn't have to pay off the loan. He can pay it off whenever he wants. But at least he knows that he has the ability to pay it off. And when he does, he still owns the Ethereum that he put up. So yeah, I guess yeah, it just comes down to, what your preferences are, what your risk tolerance is.
Awesome, awesome. Right, so we're just coming into like a new year. Happy 2024, by the way. So I mean, there's a lot of, macro events happening this year that could perhaps, affect the crypto market also. So what are you keeping an eye out for?
So right now it's like overwhelmingly the ETFs, I think, that we're
What's
looking at.
happening
So
there? Gosh. Honestly,
I
it's like yes, no, yes, no.
yeah, I know. I guess you have the Bloomberg analysts. Those guys are all pretty bullish. They're predicting like 90% between the 8th, I guess between today and Wednesday.
Mm,
They think it's going to happen today, between today and Wednesday, the approvals will happen. And
yeah.
then I suppose they're also estimating that the actual ETFs themselves will trade in a matter of days, like rather than weeks or anything like that. So for us at CryptoQuant, and really what I'm looking at as well is the Bitcoin ETF approval potentially, or rejection. So it could be huge. It could be huge for price. It could be huge for Bitcoin price, and it can be huge, obviously, for the tail of crypto as well. I think if it is approved, there'll be a decent amount of funds start flowing into Bitcoin. But I personally think that it's quite a risky product. I mean, for a number of reasons, you've got a lot of counterparty risk going on there. So you've got layers of it. You've got, okay, so let's say you buy into like the, BlackRock or even the Valkyrie or whoever, Van Eck, there's, like 10 or 12 of them. But you've got, the ETF manager, you've got the authorized participants, you've got Coinbase, you have the SEC, you even have the US government as well. So you've got a list of about five or so counterparties just to invest in this one product, any one of which could rug you at any time, right? So, yeah, and one of the red flags for me personally for some of those is Coinbase being kind of like the custodian of choice, while at the same time, having been alleged by the SEC of running a questionable or unregistered exchange, brokerage, and clearinghouse. They're saying it's kind of like not related to Bitcoin, which I agree. It isn't related to Bitcoin. It's related to the, securities, potentially the securities that, and the staking programs. But I mean, the ETF is a security, so it's, you know, we're not necessarily just talking about Bitcoin. We're talking about, the securitization of an asset, of which these other ones are questionable. So I think that's kind of like a red flag there, potentially, that could be maybe grounds for a delay. But I really don't know. Don't look at me and if you want an answer. But yeah, I think the ETF is a big one. Uh, yeah, I mean, right now, like that's kind of all we're talking about, like the last
Yeah.
week. Yeah.
Yeah, awesome. Well, like what's the okay, I like to have spicy takes here. So what's the worst case scenario for you in this instance?
The worst case scenario. So I'm kind of agnostic whether the Bitcoin ETF is approved or not. So, um, so the worst case, so I don't know if there is, I mean, the worst case would be, I suppose, that they're approved and, uh, it doesn't go to plan potentially for whatever reason. And, there's some type of melt up situation that happens. You know, a lot of firms have tried to wrap Bitcoin or have tried, you know, a lot of centralized entities have, you know, uh, have offered Bitcoin products and it hasn't gone well. You know, the FTX or the BlockFi or, you know, a number of other ones, a number of other exchanges, right? So wrapping a 21st century, you know, it's not just a 21st century asset, it's a 21st century like monetary system, essentially, right? In 20th century technology that isn't made for that. It's ETFs are made to um, wrap assets, just assets, typically. So when you wrap Bitcoin in an ETF, first of all, you're getting rid of a lot of the properties of Bitcoin. So it's no longer able to act as a settlement network for those who are buying it. It's no longer able to act as a peer-to-peer payment system. So you're kind of getting rid of a lot of, you know, the benefits of Bitcoin. You're not able to self-custody it. And so whether that's like a risk for the ETF or a risk for the those who are purchasing the ETF, the risk kind of is there. So I think that the biggest, you know, the worst case scenario would be it's approved and you know, it doesn't roll out in the way that we expect.
Awesome. And that's a really interesting take actually, because putting it in an ETF defeats the whole point of Bitcoin, right? So yeah, that'll be one to watch, I guess.
They're just trying to get exposure to the price.
Mm,
That's it is, right? They're trying to offer exposure to the price, but but not, I mean, you can't offer any exposure to anything else in an ETF form because that's where like the 20th century technology doesn't meet the 21st century um, technology of Bitcoin and what it can offer. So I think that's where there's kind of some imbalance.
yeah, for sure, for sure. So we did touch up on, kind of spicy takes. Would you like to share with us what your spiciest take about crypto in general is?
Um, there's some pretty spicy takes actually. Uh, you know, especially with Bitcoin. Um, so I suppose where can I go with this? Well, what we were talking about before, right, was, you know, I decided when I went into crypto full time, I decided to definitely go into an area of crypto that was like not regulated. So, I mean, when I say not regulated, I mean like data and analytics and research, right? Like it's not a regulated, it's not like an exchange or a broker or something like this. Just because I knew what what we're trying to do, right? Like what everyone in crypto is trying to do. We're not trying to be regulated, are we? Like, you know, that's the whole point of it, you know? So we're trying to disintermediate, you know, anyone who tells us what to do. So we create game theory to create protocols in which, you know, it's decentralized to the extent that, you know, not only do we not need intermediaries to engage in financial transactions with our counterparties, but also so that we don't have to be regulated by, you know, a third party as well. So that's kind of what crypto in a way meant for me. Maybe it was because growing up I didn't like authority or something like this, but you know, I think Bitcoin does a really good job of it. Um, and crypto does an okay job of it, but it's much easier to regulate crypto, as we've seen in Europe, right, than it is to regulate Bitcoin. Um, but I mean, that's not to say like you can't regulate it. I mean, you can regulate around Bitcoin. So, for example, I think, you know, is it Elizabeth Warren, like she's trying to put um, some some policies forward, which basically would expand on the was it Banking Secrecy Act? So basically bringing or yeah, bringing a lot of more entities into what's called like the financial institutions. So Right now it's banks, right? They have to go through AML, they have to go through KYC. You know, they want to see all of your transactions, what you're doing, and they'll tell you, oh, it's to stop money laundering or it's to stop, you know, terrorist financing. Even though this happens all the time in the banks, even with the act, right? They want to bring people, they want to bring, you know, new players into this for more oversight. So they're going to bring, you know, minors into it. They're going to say, you know, you are engaging in financial transactions, so you are now under the Banking Secrecy Act. Or they'll say validators, like in crypto, right? Like you guys are validating transactions, so now you're a financial institution. You have to be regulated. Or I
Mm,
think the worst one, right, is hardware wallet companies, right?
mm,
You are you are creating a product that enables individuals to engage in transactions. So now you are going to be under the Banking Secrecy Act. So um, they can't regulate the protocol, Bitcoin protocol, but
mm,
they can regulate around it. But with crypto, you know, they kind of can more easily regulate the protocol. Like we've seen a lot of validators censor, you know, blocks more so in crypto because some of these entities, you know, for whatever reason, you know, these entities are more centralized. You know, there's you know, just by nature of proof of stake versus proof of work. So I think, yeah, that's fairly spicy. I mean, I can get pretty
mm.
spicy if you want me to. I don't know, I don't know how you know, deep down the rabbit hole we should go.
Yeah, go on.
Um, I mean, really, like the way, I guess the way I look at Bitcoin, right, is essentially, I mean, it's competing directly with the central bank, right? So it's competing with the monetary system that we have. And so right now that monetary system is the central banks, and you know, the main central bank is the US central bank, um, with their token, which is the US dollar. And the US dollar, well, they had their ICO, you know, back in the day. And before that, the main token was the British pound. And then the US dollar took over. And so now we're kind of coming to an inflection point where it's like, okay, we can kind of all see the writing on the wall, right? You know, inflation is, you know, kind of out of control. They say it's 2%, but that's 2% for the consumer inflation index. But if you look at the asset inflation index, or if you look at other, you know, the producer inflation index, like these are much higher. Asset prices are rising much higher than, you know, a basket of goods. So when you take all things into account, like inflation is very high, you have just the endless printing of dollars. You have the endless printing of dollars to fund things that, you know, whether we agree with or not, and can we vote our way out of those things or not? And so do we have a choice? No, I guess we don't have a choice really. So we have to fund these things. And so it's like, okay, people are looking and thinking about what's next then? What is going to come next after the dollar? And even is it going to be the same fiat system, or even the same, even if it's like an asset-backed system, right? Backed by gold, which was, you know, potentially what was before. You know, is it going to be another fiat-backed currency or monetary system, or is it going to be a totally new one? And I think if it's going to be fiat, or if it's going to be kind of fiat related, it may be the yuan, right, in China. But I think that kind of comes with its own, you know, issues. And I think, uh, you know, before it would be the yuan, I think it would be more like multipolar. So there would be a, you know, a lot of different competing reserve assets or reserve currencies. Like it would be the dollar, the euro, and maybe the yuan competing against each other for a period of time. And maybe that's kind of like what we're in right now, right? With the BRICS, you have the BRICS, you know, you have the US dollar, you have China. So I think that's kind of like the period we're in right now. But really, they're all the same. I mean, they're all shit coins essentially, right? So that's what Bitcoin is, right? That's what, I mean, that's kind of what we all believe Bitcoin to be. Bitcoin is going to replace it. So, you know, you have this game theory playing out, and, you know, the central banks and everyone who's the closest to the money printers, they want to, you know, keep the control. They want to keep the money printer going. So they'll do everything they can to, right, stop Bitcoin. And so the people who are close to the money printer, you know, the Elizabeth Warrens or the Jamie Dimons, you know, they come out and they say, we hate Bitcoin. We don't like it. It's what, you know, all these terrorists use. It's what all these criminals use. Um, but, you know, it's inevitable to a certain extent. Like on the one hand, they're saying, oh, we don't want to use it. And on the other hand, you've got Jamie Dimon and JP Morgan as an authorized participant. So they understand it's inevitable, right? And so it's kind of this game theory that's playing out. And I think what everyone has to do is, store their money, store their value, time, energy in Bitcoin, and definitely self-custody it. Like for sure, you have to self-custody it. Um, because if you don't self-custody it, then you're basically giving your Bitcoin to these people through the ETF, right? Or through Coinbase. So if you don't self-custody it, then Bitcoin doesn't work because Bitcoin relies on the network effect. So Bitcoin does better when more people buy into it. But if you buy into it through a proxy, through an ETF, or through a platform, it's not increasing the network. It's actually decreasing the network because all these Bitcoins get held by just a few entities who can then, take more power and control over the network. So I think, yeah, like, what's happening right now is like, game theory kind of playing out with Bitcoin. And then you have, crypto, which is kind of like, just this kind of like almost like a radical idea of almost crypto anarchy, where you got people doing all kinds of stuff, right? You have people testing, exploring new ideas, launching scams and things like that. And you have some really good ideas kind of coming up to the top. And some of those good ideas are being built on Bitcoin, right? Like you have ordinals, NFTs. You have, BitVM, that kind of the white paper that came out with the potential ability to, you're not necessarily like engage in more complex transactions, but the ability to scale it like vertically, so to be able to hopefully reduce the fees, maybe something like an alternative to Lightning, in order to process more transactions, off of the base chain. So yeah, I think it's inevitable, Bitcoin. And I just kind of hope to see people maybe buy the ETF, right? And hopefully it'll be a quick rug for them, so they can learn their lesson, and then they can go buy Bitcoin like it's supposed to be, and then self-custody it for themselves. So most people get rugged. It's better to get rugged early and learn your lesson right and do it the right way.
Yeah, for sure.
So, yeah.
Sure. Yeah, well, that was a very spicy take indeed, that basically you think it's inevitable that Bitcoin will become the world's reserve currency, the next one. Well, we'll see, we'll see. So, apart from, you thinking, Bitcoin will, like everyone will use Bitcoin, what do you think other major trends will be in crypto?
So I think the trends that most people look at are in relation to regulation, really. It's regulation, right? And how that kind of plays out. But for me, it's also the Bitcoin ecosystem and how the Bitcoin ecosystem develops. Now, I think, the Bitcoin ecosystem and the development of it is largely based on kind of like broader crypto and what works there and what doesn't work there. And the reason for that is the nature of how crypto works, because Bitcoin doesn't have a VC as strong of a VC ecosystem, because you can't, in the same way launch your own token, right? And uh, if you can launch your own token in Bitcoin, then you're taking away kind of from Bitcoin's, monetary policy in a sense. Unless you burn Bitcoin to create this new token, you're essentially, taking value away from the Bitcoin ecosystem. So I think that, I'm definitely going to keep my eyes on kind of some interesting developments in crypto. And, I think, for example, like zero knowledge proofs have been interesting and successful. And I think like in regards to BitVM, I think that's kind of where they're going to explore first to scale the transactions and things like that. And in regards to the regulation, I think that is pretty interesting as well. And to see what's going to happen, especially after the launch of the ETF. And, with the increasing centralization of, custodial control of Bitcoin and, what that means for, people who don't entrust others with, their money. Are they still going to be able to self-custody, or will there be policies put in place to make it unfeasible? Whether it is like the Bank Secrecy Act or whether it's, other things that make it just not feasible for an individual to follow the rules, essentially. And then maybe they become illegally holding Bitcoin, like gold was back in, I think it was the 20s or the 30s, where they, made it illegal to hold gold, and you had to, turn your gold in to the government. So regulation and, watching, the broader Bitcoin ecosystem, and especially like the intersection of, you know, crypto and what can be, brought over from crypto to enhance Bitcoin.
Mhm. Awesome, awesome. So obviously you have to kind of keep an eye out on these trending pieces of news. But how are you actually preparing for whatever may happen?
So that's a good question. It's difficult to prepare, right? I mean, so, just staying up to date with the latest, hardware, self-custody hardware, um, is a big one for me right now. I'm doing that type of thing. Uh, I would say just applying pressure, and kind of doing these podcasts, right, and getting the message out there to people as much as possible. Like, is the Bitcoin ETF the right solution for people, who want to get exposure to Bitcoin, right? Like, is that the way you want to do it? And just to let people know that, yeah, I think you have a lot of like Bitcoin maxis, especially coming out and saying like, oh, the Bitcoin ETF is gonna be amazing. It's gonna pump our bags and whatnot, right? But what are the downsides? What does it mean? Like what kind of comes with the Bitcoin ETF in terms of some of the things I mentioned. So applying the pressure, like educating people as much as possible, just ensuring that people are, everyone's situation is unique. So maybe it is right, the Bitcoin ETF potentially. So those are kind of the big things that we do at CryptoQuant as well. Like we educate people on these different areas. If the Bitcoin ETF, there's a number of other like ways you can get exposure to Bitcoin. If you want to invest in something that has like a QSIP, right? That's essentially what it is. Like people need the QSIP to invest, and they don't know how to do it without it, or they're not allowed to do it without it. So you've got Bitcoin mining companies, you've got MicroStrategy, and those have been performing, I think, better than Bitcoin, for example. So if you're not ready yet to, take the step and plunge and self-custody Bitcoin, but you still want to get some exposure to those, like, those green candles, then the mining companies did really well. I guess we'll see how they do going into the halving. I think it might be kind of volatile, but yeah, Bitcoin miners, MicroStrategy is essentially a de facto Bitcoin ETF. Yeah, I think those are some of the big things that kind of we do generally. Yeah, we'll see.
Awesome. Right. So before we end, do you have any closing comments or maybe like some advice for newbie traders at all?
Yeah, so careful with the
I mean,
leverage.
apart from self-custody. Oh, sorry. Yeah, keep away from leverage. Yeah.
No, I mean,
Mhm.
careful with the leverage. I mean, so that was I did a lot of trading when I first started as well. And actually, I know a few people who did very well with leverage trading. Um, very well. And you know, it only takes one trade, right? It only takes one trade to wipe that out, especially if you don't have things like, the stop losses in place, take profits, stick to, the strategy. Um, so I would say, yeah, I think if you have to look up what those things are, maybe it's not for you, right? But, what I do, but it's not for everyone, and this isn't necessarily advice, but for me, like my strategy is essentially, consistently DCA, consistently buy it. But if I want to, and I only take one side, I've only ever taken one side of the trade, which is a buy. Um, if you do want to invest more at a certain time, the things that I look for are the fundamentals of Bitcoin. And you could look for the fundamentals in any other crypto asset as well. But just to use Bitcoin as the example, it would be, for me, really realized prices versus the market price. So at CryptoQuant, what we do is, we monitor every single transaction that's recorded on the Bitcoin blockchain. So we know the price at which every single UTXO was traded. And so we take and we record all of those and we aggregate them into a price, which is called the realized price of the market. So the average price at which every single Bitcoin was bought. And then you look at that price and compare it to the price on the exchanges. And, if the realized price is, very far below the market price, that's a good time to buy. If the realized price is a lot higher than the market price, that typically means that investors are going to be taking profits. And that could result in a price down. So, if the realized price is very low, that's typically when I'll do like a lump sum. Another good metric to watch is flows from spot exchanges to derivative exchanges. So typically people like to take on a little bit more risk during bull markets, which I think is probably the time to do it, especially if you're, taking out long positions, right? So when we see a lot of flows from spot exchanges to derivative exchanges, this can typically indicate like maybe a turning point in the market. So that could be a good, bullish indicator. And vice versa, right? When people are taking less risk and coins are flowing back to spot exchanges, potentially a bearish reversal. So definitely on chain is what CryptoQuant focuses on. We focus on the fundamentals and trying to find the signal. So that's what I do. It's typically a slower trading process, but you can always trade the volatility of some of these fundamental indicators as well if you want to speed up a little bit. So yeah, I would say, yeah, definitely look at on-chain. I think it's, undervalued right now.
Yeah. Awesome. And it's amazing how just, on-chain data can tell you so much about where the market's heading. So, I mean, and we can find all this data on CryptoQuant, right? Or is it just
Like,
Bitcoin though?
no, yeah, we have Bitcoin, Ethereum, we've got maybe 10 chains in total, 10 chains in total. So, hundreds of crypto assets as well. So no, not just Bitcoin. And our platform is for retail and institutions, so everyone's welcome. Unlike traditional finance where, everyone's priced out. So
Mhm.
yeah, definitely encourage everyone to go check it out.
Yeah, amazing. Well, thank you so much for your time.
Thanks for having me.
Thank you so much for watching this episode. And if you enjoyed it, don't forget to give us a like, comment, and subscribe. Thank you so much, Ben, and I will see you guys next time. Bye.
Bye.